Imagine this. 20 years from now, you're living the life of your dreams. A beautiful home, financial freedom, traveling the world without a care about money. Now here's the twist. It's entirely possible if you make one crucial decision today, learning to invest in the stock market. This isn't about winning the lottery or inheriting a fortune. So, are you ready to dive in and unlock the secrets of the stock market? Let's go! The stock market might seem intimidating at first, like a confusing maze of numbers and jargon. But here's the thing. The stock market is simply a platform where companies offer small pieces of ownership to the public in exchange for investment. When you buy a stock, you're essentially buying a tiny slice of that company. The key is understanding how to identify the companies with the potential for growth and learning how to navigate the market's ups and downs. With the right knowledge and a bit of patience, anyone can learn to invest wisely and watch their money grow. It's all about understanding the forces that drive these fluctuations and making informed decisions based on your goals and risk tolerance. It's about making smart, strategic decisions that will benefit you in the long run. Now let's break down the basics of investing in a way that even your grandma can understand. First things first, you need to open a brokerage account. Think of it as your gateway to the stock market. Once you've got your brokerage account set up, it's time to start exploring the exciting world of stocks. You can buy individual stocks or explore ETFs, which are like baskets of stocks that track a particular index or sector. Remember the golden rule of investing diversification. Spread your investments across different companies, industries, and even asset classes to minimize risk. Investing isn't about timing the market, it's about time in the market. Start small, stay consistent, and watch your wealth build over time. Let's talk about something that nobody likes to think about, the opportunity cost of inaction. Imagine this. You have $10,000 sitting in a savings account earning a measly 0.05% interest. While you're feeling comfortable, inflation is silently eating away at your savings. That $10,000 you have today won't buy you the same amount of goods and services in 10, 20, or 30 years. Now, imagine if you had invested that $10,000 in the stock market, even conservatively. Historically, the stock market has returned an average of around 10% per year. By not investing, you're essentially choosing to lose money. It's like saying no to a free raise or leaving thousands of dollars on the table. So, what are you waiting for? Don't let fear or procrastination hold you back from building a brighter financial future. Start small, learn as you go, and remember that the best time to invest was yesterday. The second best time is today. Step 1. Know what you're investing in. Think of the stock market like buying tiny pieces of companies you believe in. Apple, Amazon, Tesla. These aren't just brands, they're opportunities. Investing in them means you're becoming a part owner. Platforms like Robinhood and Fidelity allow you to start with as little as $10. Step 2. Diversify. In the stock market, this means spreading your money across different companies, industries, and even countries. It's like having a safety net for your investments.